US stocks extended their gains from yesterday on expectations that the European Central Bank will be moving quickly to help ease tensions regarding the European debt crisis. Now, this comes on the back of comments late last week from the ECB president about a possible bond buying program. Now, the US job openings data came out overnight last night looking pretty good, showing the highest level of job openings in the last 4 years. Now, this is good for the US because if they can get more people into jobs, we should see a possible reduction in the unemployment rate in the second half of this year. Looking to local indices, the Nasdaq market was up 26 points, while the S&P 500 and Dow Jones Industrial Average were up around 0.5%. Looking to Europe, some disappointing economic data did little to dampen local indices, with the German indice up around 0.7 and the FTSE in London up around 0.5% as well. US farmers are very concerned about the cost of feed at the moment, in particular corn, due to the drought that they are experiencing over there at the moment. Now, this is because corn in particular is used in the production of ethanol, and the US has a particular requirement to produce a certain level of ethanol to help alleviate the dependence of and consumption of oil in the US. Now, farmers have always had a particular bone to pick in this area due to the rising cost of corn. Now, a recent study has found that by reducing the amount of ethanol production, this will help reduce the cost of corn over a temporary period by deferring the corn production into the following year when weather is better. However, it's also been found that by reducing the amount of ethanol being produced, this will potentially increase the cost of ethanol in the following year, which will push producers of ethanol into paying more for the corn that the farmers are producing. So in conclusion, there is a particular limit that can be reached in the manipulation of corn prices by reducing the amount of ethanol. So unfortunately, there are no easy solutions.